when you have a situation like this, and we talked about this is a market we've been wanting to swing trade, and the market's moving higher today. The truth of the matter is, the day of the movement, or the day of the acceleration of the movement, or the day that it just happened to get our collective attention, is not necessarily the day that the opportunity presented itself. And that's the thing, there's not an opportunity, especially in a daily chart, to trade every day. Opportunities will come more frequently with, obviously, shorter term charts, okay? Because you're getting more candles, more shifts through market cycles, and more development. Again, compare one new candle a day on a daily chart versus 48 new candles every day on a 30-minute chart. So again, this is, even though we're talking about this market accelerating here today and it's up towards 3,000, realize the day to get in, and really the only 2 days to get in on this daily time frame within the context of this 12 to 2 o'clock market cycle, which is definitely, there's no argument about that. It may not be the smoothest thing I've ever seen, and it may be less steep than it was going through September and October, but this is definitely 12 to 2, right? And it was last Wednesday and last Tuesday and Wednesday, the 25th and 26th of November, that set us up to enjoy the move. So in my opinion, the 27th, 28th, all the way up to today, the 5th, these are just days that we should already be in the market, not looking for something to do on this chart. I think when it comes to timing of trades and wanting a particular price and waiting for the right setup, okay, it's tough. I think too many people overtrade because they don't see these opportunities, and then just sit tight because they're enjoying a ride up. It's these opportunities we have to keep an eye on. We can park an order in here. Realize you could have parked a buy stop at the top line of the wave. On the 25th, top line of the wave was 2174. For that matter, you could have parked a buy. You could have parked it at every single day. Every single day you got up, you could have parked a buy stop along the top line of the wave. Okay, until finally the 25th and 26th yielded that opportunity to actually get filled. So, when it comes to setting up trades, when it comes to particular time frames, there is a setup we're looking for. And if we miss the 25th and 26th, guess what? On this time frame, for this type of setup, there's nothing we can do. I don't want you scrambling for another excuse to get in. I don't want you looking for other more conservative level, more aggressive levels. Could you play 2,500? Sure, I'm not saying that's not valid, but the best setup, and we got the opportunity, was back here. Okay? If you missed the setup on the daily, what I'd rather you do is not look for another excuse to get in on this daily time frame, but rather look at some other time frame for another valid entry. And if you miss it, you miss it. Hopefully that drove home enough reason to stay alert and park these proactive orders that you are less likely to do it again. And let me also mention, there are times we're going to miss trades. No matter how alert we are, no matter how proactive we are, there's going to be times we're going to miss trades. But that's when we're also happy that markets cycle, because a momentum trade might turn into a trend, and that trend might turn into a swing. So you start with a sideways market momentum. Maybe it's a sideways market inside the range. Then you go to a trending market that gives you swing opportunities. Maybe then at some point you might run into a shorting inside the range opportunity up here at 3,000. Who knows? But because the market's always cycling, we have an opportunity to possibly find other setups, not only on a single time frame, but across multiple time frames. But don't chase trades and especially in a swing trade, don't chase them, because you're waiting for a correction. You're waiting for, even though you're trading within the context of a trend, be strict, because what happens, and here's the psychological trap, and this is what I'll kind of end this little topic on. If you get in the habit of breaking the rules, there's sometimes you break the rules or bend them a little bit, and you're going to be rewarded. And the more you're rewarded for bending the rules, first you have to check and see if maybe the rule is not a good rule. Maybe you need to amend the rule. Okay? That's one thing to consider. But By and large, bending rules will eventually get you to bend them more and more and more until you're functioning outside the rules altogether. And when you do that and you're rewarded, set your watch, because you will blow up. Because what's happened now is you just think that, we all do. I'm not saying you and I don't. I've done it. This is why I'm sharing it with you. At some point, you will blow up. You will have that really one big bad trade. I don't know what level it's going to hit you with, but at some point, there's going to be a disaster because you're just trading whatever you feel, not within the confines of the rules. And for me, swing trading, we follow the trend, we wait for the corrections. Now, in this case, the correction, was this considerable bounce. This thing bounced for, since the pullback to the wave. Okay, where you have the top line of the wave at 2187, call it 22. This thing has bounced a lot, right? So you're thinking, well, Raghi, why couldn't I have gotten in at the break at 25 or so forth? That's momentum trading, though, isn't it? Okay? If after it went above 2500 you deemed you don't mind a pullback to 2500 as a test of support, well, we've talked about that as a more aggressive way of getting in. Maybe you use some sort of Fibonacci. That's something you could have looked at as well. Okay? But the bottom line is we have this very nice conservative, visual, easy way to get into swings. Utilize it. And again, what I'm trying to drive home, and my main point here is that yes, this chart probably had everyone's attention yesterday and today with the kind of move we're seeing, not only in crude oil but in the dollar loonie itself, dollar Canada itself. But the real opportunity was back here on the 25th and 26th, and that's what I want to drive home.